Good morning and welcome to today's market briefing. Markets around the world are in turmoil following a historic sell-off, with Taiwan equities experiencing one of the sharpest declines on record. Taiwan market recap. The Taiwanese stock market reopened after a two-day holiday and immediately faced intense pressure from global developments. The announcement of broader-than-expected reciprocal tariffs by former President Trump caught markets off guard, sparking panic across Asia. At the opening of futures trading at 8:45 a.m., contracts hit their daily limit downs. By the market open at 9 a.m., it became clear that nearly the entire index would follow suit. In total, 1,711 listed companies hit their limit down levels, reflecting broad-based liquidation. Fundamental or thematic strength was no match for macro concerns. Investors simply weren't buying. Even blue-chip names weren't spared. Though domestic-oriented firms like Chunghwa Telecom, Taiwan Mobile, Far EasTone, and Uni-President saw their limit downs temporarily lifted, the broader market saw limit down moves across the board. In a humorous aside, shares of karaoke chain Cashbox KTV managed to stay afloat. Perhaps investors expect more customers to turn to music amid the market gloom. The key issue is this: in times of systemic shocks, liquidity dries up. Sellers flood the market, but without buyers, many investors are left trapped. Yesterday's sell-off saw a record single-day drop of 2,065 points in the TAIEX, marking the worst intraday decline in history. Flight to safety capital rotated swiftly into safe haven assets. Bond ETFs and inverse ETFs were among the few inflows, consistent with risk-off behavior. No industry group was spared, and even traditional defensive sectors failed to provide shelter. Is the National Stabilization Fund next? Historically, Taiwan's National Stabilization Fund has stepped in during major crises, ranging from the 2000 tech bubble to COVID-19 and the Ukraine war. So far, the TAIEX has just broken below its 3-year moving average. A move toward the 10-year moving average could trigger formal government support. Asian markets follow suit. Yesterday saw widespread selling across Asia. Shanghai Composite fell 7.34%. Nikkei 225 dropped 7.83%. Kospi triggered a circuit breaker after falling sharply. India and Vietnam fared better, with declines of 3.24% and 1.56% respectively, as both nations appeared more conciliatory toward U.S. trade demands. Trade talks and U.S.-China tensions. The crux of the matter remains the U.S.-China trade dispute. President Trump has given China a deadline of April 8 to roll back retaliatory tariffs, or face even steeper penalties. Meanwhile, China appears to be selling U.S. treasuries, with a $50 billion offload raising red flags about financial warfare. Any escalation risks reversing gains in global bond markets. With the U.S. facing a massive 2025 fiscal wall, where large tranches of treasury bills mature, Trump's administration needs revenue from tariffs to patch budget deficits. That makes a full-scale tariff rollback unlikely. Key takeaway: markets are not just grappling with fundamentals, but with geopolitics and liquidity risk. For investors, this means heightened volatility, policy uncertainty, and a renewed focus on capital preservation. We'll continue monitoring developments closely, especially any updates from the Taiwan Stock Exchange, U.S.-China trade discussions, and global central bank responses.